Bank of Canada dropped rates again. Why did they do it? Well, they dropped quickly further if the tariff war continues. And what does that mean to the real estate market? Hi everybody, Nan here. Today I want to talk about the decision from Bank of Canada yesterday to drop our benchmark rate by another 0.25%. Let's take a look at the screen. So basically yesterday, the governor of Bank of Canada announced that with a 25 basis point cut, mainly because as Trump racks up tariffs, right? So basically this drop is mainly because of the tariff war. And the main reason is behind the restraining of consumer spending intention. So basically the Bank of Canada thinks, okay, the consumer is unlikely going to want to spend. The demand side of the equation is going to drop, so they're dropping the rates preemptively, and also the business plans to hire and invest, right? So our business owners have stopped to hire new people and invest in their business because of this threat. And the Bank of Canada decided, you know what, we're gonna drop rates a little bit just to give people a little bit of boost in their, I guess, day-to-day confidence. And he emphasized that this is not because Canada's economy is doing badly, because we just saw Q4 2024. You see the GDP growth is actually 2.6%. That's actually a pretty good number, right? The most recent Q4, we had a good GDP growth, even though Q4 we haven't started the tariff really conversation much yet. But Canada economy itself, you can see, is not doing badly. And unemployment rate is high at 6.6, but it hasn't really gotten worse. And employment growth is relatively strong between November to January. Okay, so he's saying that despite Canada economy overall doing okay, we're doing this 0.25% rate drop to prevent, I guess, the threat affecting consumer confidence and business intention to invest in the economy, to give everybody a little bit more confidence to keep spending, right? So this leads to the question that, hey, Bank of Canada said we're going to drop rates to help with the tariff. Are they going to drop more if the tariff continues, right? And so Tiff actually emphasized that's unlikely the case, right? The Bank of Canada's job is not to fight the tariff war for the government, but their job is to keep inflation in check. Right now, the only reason they dropped the rates to help with the tariff is because inflation data looks good. Inflation currently is sitting at 2% target, right? He warned us that March inflation is going to look worse, expecting to increase to 2.5%. Why? Because in March data, we're not going to see the HST exemption we had during the Christmas holiday anymore, right? So the HST portion is going to be added into the consumer price index so that the price likely will rise a bit further, and we'll see the year-over-year inflation number rising to 2.5%. And also the core inflation is consistently above 2% due to housing shelter cost, right? So that means he's cautioning us, saying that, hey, don't rely on Bank of Canada to fight the tariff war. We're only doing it this time because inflation data looks good. But going forward, inflation data is expected to look worse. And if the Bank of Canada has to choose between the tariff hurting the economy or fighting a high inflation, Bank of Canada will prioritize fighting a high inflation first. Okay? They'd rather keep inflation down than seeing like a bad economy. So their priority is more on the inflation side. The economy side, they're saying we gotta have the actual government to do that, right? Such as increasing inter-provincial trade or expanding our overseas trading partners with other countries. He's saying that that's the government's job. But Bank of Canada will need to keep inflation down. So he's saying that even though we dropped rates now, but if our inflation starts shooting up, Bank of Canada will likely stop dropping rates, even if the tariff continues, maybe even raising rates to bring the inflation down. Raising rates will hurt the economy even more, right? It will hurt the demand, hurt business investments. That's not the priority. Bank of Canada needs to, even if they need to hurt the economy more, they need to bring the inflation down. Okay, that's Bank of Canada's job. So he's cautioning us, don't think that, hey, because we did it this time, we're gonna do it again and again and again, or like we did during COVID, dropping interest rate from 3% to like 1% or 0.5% just to boost the economy. He's saying that no, Bank of Canada is not going to do that. So monetary policy, basically they need to support economic stability amidst uncertainty, right? So you need to monitor between inflation and economic pressures, and reaffirms Bank of Canada's commitment to maintain price stability. Okay, that's their priority. So that's, I guess, for us, dropping rates a little bit is good news for anybody who has real estate and holding a mortgage, a little bit less pressure. But it's also saying that if the tariff continues, our economy looks bad, but our price goes up, Bank of Canada will bring the price down by maybe even increasing rates so that our economy will look even worse, right? So be prepared for the possibility of a double whammy, right? Tariff hurting our economy, Bank of Canada increasing rates to fight inflation, which again hurts our economy, so our economy is double as bad. Okay, so that's a possibility. So for anybody who has a mortgage or has tenants and have a job, on the lookout, right? Understand that risk. Anything could happen this year to our money, our investment, our livelihood, our tenants' ability to pay rent, our own ability to make money. Like everything is on the table. So that's, for us, it's a little bit more scary. And that's why people are not buying real estate, right? We saw in the last video, people have made the least transactions in February in terms of number of buyers deciding to buy real estate. The least, like lowest of all 10 years February, right? And our months of inventory is at all-time high, higher than like every other month in the history. So we're pretty bad in the real estate market right now. And the March so far, like half a month of March already passed, I do not see improvement in the real estate market. So coming end of March, April, when we see the March data, personally, unless the second half of the month picks up materially, I don't see March being much better than February either, right? Which is against seasonality. Usually March should be a better month than February, but we're not seeing that. So if you look at the graph again, right? This graph actually shows you, hey, yesterday we just dropped again. So since middle of last year, we've dropped rates 7 times, okay? 7 times from like 5% all the way down to 2.75 right now, which is, it looks lower. Start with a 2 at least. Hopefully that gives consumers a little bit more confidence that we're in the lower rate territory now, right? Like I had a friend who actually, because the rate promotions the car dealerships are giving now, they're giving like 2.99, 3.99 lease rates, which actually for him is an encouragement. He's like, oh, okay, I can afford to lease a car again, right? He actually made the down payment for a new car because of the low lease rate promotions these days. So so you cannot say that dropping rates does not help the economy. It just, for real estate, we've explained why dropping rates will not translate into immediate real estate gains, because you can see that on this graph, despite we've dropped the rates 7 times already, the bottom is our GTA real estate months of inventory, which shows you how busy the market is. And ever since started dropping rates, our months of inventory has been on a very high level still, right? Like highest of all the past 3 years, which is ironic. As you can see, when our rates were at the peak of its height between the previous year, right? July 23 to like say mid of last year, during this time, our months of inventory during this time is actually even lower, which is better market than where we're now, right? Which is, it's so you can see how people have lost confidence in the real estate market because of all these ups and downs and all these uncertainties, and a lot of the mortgage are starting to renew, because we know that 2021 is the year that made the most amount of transactions, which is the most amount of mortgages. And 2021, fast forward 3 years, 2024, 25, 26, usually mortgages are locked in for 3 to 5 years, right? So 2024 to 2026 is going to be the peak of renewals for all these mortgages that sign up during the year 2021, which the prices were high, right? So that's why we see the default rate, power of sale, has been going up in the past 12 months. So which is why you see like consumer confidence in real estate market is quite low right now, right? And that's why you can see, even though rates has dropped 7 years, but because they've been, so the crying wolf already happened twice in the past, right? Last year, March, for example, when real estate market was busy, right? Because people thought, hey, we're going to start dropping rates in March, but it didn't, right? And then the year before, when the market was very busy, people thought, okay, hey, our rate increase has stopped. But then no, it started going up again. The rates started going up again the middle of 2023. And then you can see the consumer confidence just lost confidence over and over again, right? During these hikes in months of inventory. So people has been like tired and scared. And after 2 years of struggling, right, between 2022, 23, and 24, almost 3 years of struggling, consumed a lot of their savings, right, to kind of carry through the tough times. And now people are just getting tired of keep consuming their savings to hold on to real estate. That's why a lot of investors are trying to let their property go, right? They want to stop the loss. That's why we see, what we see today in the real estate market. And in terms of the 5-year bond yield, we can see that on Wednesday, before Wednesday, there was a bit of confidence to say, hey, you know what, we're gonna, drop rates, and everybody was a little bit more optimistic. You can see rates were dropping, right? Before the rate announcement on Wednesday, people were anticipating the rate to drop, which make the bond yield went lower. However, Wednesday, 10 o'clock, after the announcement, the 5-year bond yield actually went up afterwards because they sort of hear the message from the Bank of Canada to say that, hey, even though we're dropping rates, we're not gonna make big drops to help the economy, right? Our priority is inflation, and inflation is expected to go up for the reasons he mentioned, right? So, and their priority is to fight inflation, even if it means they have to increase rates. So, people are a bit more worried now, and that's why you see after announcement, the 5-year bond yield actually went up a bit. And from the past year of struggling and dropping rates quickly, we can see that our Canadian dollar against the US dollar has been going up quite consistently, right? So we are now at $1.44 per US dollar, which is Canadian dollar has been hit quite badly. And obviously you can see that Bank of Canada don't really care about that, right? Before people were saying, oh, we're not gonna, deviate our rates from US too much because we care about our Canadian dollar being strong. But this proved that, hey, you know what, Bank of Canada don't care. All they care about is inflation rate down, right? That's what they care about. Okay, so just wanted to have a quick chat about yesterday's, news announcement, and hopefully that our GTA real estate market in the coming, let's say, summer and fall can pick up a little bit from better news, such as like settling down of the trade war, having more clarity of what's going to happen, maybe having the trade war gone altogether, right? Having that threat and the uncertainty, removed, and maybe a new government in Canada, right? Maybe will give people more confidence. Like people need some kind of confidence booster, right, to change in the real estate market trends. So we're hoping that to happen. But until that happens, like right now, we're at the peak of the uncertainty, and that's why the real estate market is slow. So hopefully, the mid-year or later this year, the market can pick up a bit more, and we're just going to have to hold on tight between now and then, and manage our own risks and make sure we survive well. Make sure we generally do well between now and when the market does better, right? And pay more attention to data and what's going on in the news, and keep a healthy lifestyle. Work hard at your jobs. It's tough times for everybody. So yeah, until next time, stay tuned. Ciao.